Hey, welcome everyone to Story Trading. Man, do we have an exciting, comprehensive special weekly meetup line for you tonight because of what's going on in Ukraine. It just so happened we had a lot of stocks we wanted to have updates on with either recent catalysts or upcoming catalysts. So we already had all those pre-scheduled and we don't want to cancel that. So we're doing a special 2-hour edition where after we do the regular stocks, we'll jump into what's going on with Ukraine. So quick disclaimer, Story Trading is not an investment advisor. That goes also for all of our speakers and our guests. Investing in securities involves significant risk of loss. If you're watching this on social media, what is a story trading? Story trading is the practice of understanding market pricing through the lens of our 4 pillars: fundamentals, catalysts, sentiment, and technicals. We collaborate as a community on WhatsApp and on Zoom, and we are building our own app. You can sign up for that or to be part of our WhatsApp community over at StoryTrading.com. We have lots of what we call VIP picks. These are stocks that are presented on Zoom at our weekly meetups on Sunday night. So you can head over to StoryTrading.com and see all those stocks we've presented in the past with links to the YouTube recording. So as we said tonight, the topic, we'll do an update on some key VIP picks. Then we'll have that special extended session on what's going on in Ukraine and how we can benefit monetarily from that. So tonight we'll be doing TPCS with Mark Gomes giving us an update, TFFP. Zach Keller will give us an update because of recent catalysts. Gaia earnings are tomorrow, so we'll quickly chat about that. I'll give you an update on CFVI and an introduction to SEAC. So we're going to go through these real fast because this is a lot of stuff. So first, just a quick little preview of what we'll do in the second half about the Russia-Ukraine war impact. So at this point, with the events over the weekend, I no longer think this is just trading volatility, which some of us have been trying to do, and hedging and things like that in our trade room. I think at this point, this is not just noise and short-term volatility, but there is an opportunity here. And that opportunity is based on this. I believe a line has been crossed with what's going on in Russia and the threat of nukes. I think the world has been changed forever, and sentiment will try and foresee longer term fundamental changes in multiple sectors. So here are a few ideas we'll be talking about. I think these can be powerful trend trades for many months or quarters, maybe even years, a long-term shift, maybe lasting as long as the COVID trade or more. So we're talking about reduced dependence on Russia. We're going to be seeing defense spending maybe going up, fears of nuclear war, something new to our generation, which may be something that may spark some trade ideas, and we'll do some brainstorming. So we'll get to that at the end, but this is a small microcap company that's doing a reverse merger with TRILLER. Last trade $1.22, market cap 46 million. TRILLER is like a competitor to TikTok. So this is a very unique trade. I wouldn't normally look for arb opportunities, merger arb opportunities, and try to capture that difference between the current price and the closing price. I kind of fell into it because in December, this was chosen by a couple people. I think Matt S. mentioned it, and also Matt Kolb, who's now a member of our community, but wasn't then. They had mentioned this as an earnings play in December. So I was in this stock at like 70 cents. Here's a chart. I was in it right here, and hopefully a lot of other people were. And then the catalyst hit of the merging with TRILLER, and the thing just exploded. It got really lucky. And the terms of the merger implied that, you know, the stock is going to be worth $2.35 because it was calculated that TRILLER is worth $5 billion at $2.35. So that's why the stock retail got excited. Like, oh, maybe it could be worth more than $2.35. So opened like over $3. So we were really lucky. This was a huge trade for us in December when lots of people were losing money, and a lot of people made a ton of money on this. So I was able to exit, basically enter at the bottom and exit at the top. That was beautiful. And then since then, this thing's been going down, 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 down. Now, what's going on here? So again, let's talk a little bit about the details to understand this chart. So here's the background. I did mention that, mention all this. So TRILLER valued at $5,235,000 a share. So SEAC would get 2.3% of that combined company. Now that valuation is very high given current market conditions. I mean, risk assets have been down like 50% since this deal was probably negotiated. So that may have to do a lot with why the stock went down. But check this out. TRILLER owner, not TRILLER, I'm sorry, SEAC owners, SEAC, current SEAC owners have the option at closing not to hold on to the stock, which is going to get a new ticker symbol. They have the option to be bought out for $100 million. The market cap is now like $50 million, $46 million. So that's like a double. Now, this buyout, though, is 25% in cash and 75% in 1-year notes with 5% interest. So roughly around $2. So why this huge discount? The stock's at $1.20. Now it was like $1.05 early last week, and now it's $1.22. I had a really good week, and I had jumped in and like doubled my position after this catalyst came in. So we'll talk about that catalyst. But so reason for the discount is part of the reason for the discount is that the board had signed something called a support agreement. Not the board, but actually a significant person who sits on the board, a family called the Singer family, who owns 12% of the stock. And apparently the board votes with whatever Miss Karen Singer says, right? So TRILLER insisted that there would be a support agreement. Now the support agreement expired. So the S4 was late. So that's also part of the reason the stock kept going down, down, down. The S4 wasn't filed on time. The support agreement expired. So people started worrying, well, is Karen Singer going to vote for this deal? So that was one of the worries. And what happened last week is that S4 was finally filed late, right? So the support agreement expired. There's not a new support agreement, but logic stands, I think, that the companies wouldn't have filed this S4 unless they have Karen Singer's approval. And, I think it's pretty clear from some other conversations I had that at this point, the board is definitely going to vote to approve this, especially with the stock at 120 and they're getting $2 a share, right? 25 cents in cash, 75 cents in notes. Now, a couple things that have to happen, a couple risks that may explain the discount even now. So it went up from like 105 to 122 this past week. It was a great week, right? But why is it 122 and not say 170 or 180 right now, right? Because a few things have to happen. SEC first has to approve this. They're telling us about 30 days or less to do that. I don't have a lot of experience in this, but just collaborating with people, I think the risk is low that the SEC is going to, nix this deal. And then there has to be a shareholder vote, but I think that part's easy. I think at this point, everyone's going to vote for yes on this deal at $2 when the stock's 120. But here's something that could be a little bit risky, and I think this is why you see the stock basically moving with the market, because they have to raise $250 million in convertible notes as part of this closing. And I heard through the grapevine as of when the deal was first announced, like 6 weeks ago, so that they already had 150 million committed and they needed 100 million more. I don't know if that's true. It's just like rumor or chatter. I don't know what the status of that now is, but perhaps this is another reason why this stock is trading like a risk asset rather than regular ARB play, because people are saying, hey, there's no appetite for risky stocks right now. They're not going to be able to get this, close this deal because they need to raise $250 million. So maybe that's a reason why the stock's 122 and not 180, 190. The other thing that I'm trying to figure out, and I don't have the answer yet, is these notes, and the company doesn't know either yet, by the way. Are these notes going to be tradable somehow? Are they going to be liquid? Or is it just going to, am I just going to have a piece of paper that I don't even see in my account, and I have to wait a year to be paid the other 75 million plus 5% interest, right? Pro rata 75 million. So I don't know about that. And I'm guessing some of the discount has to do with the fact that people don't want an illiquid asset here. So right before closing, let's say everything goes well, they get SEC approval, the shareholder vote. I anticipate there will still be a discount right up until the last moment this trades as SEAC, probably still be a discount because there's going to be certain people who just don't want the illiquidity of those convertible notes. But again, the company actually is not committed to being illiquid. Maybe there's a way it can trade. I really don't know. Don't have a lot of experience with this. So if you guys do have experience with a deal like this, an ARB deal or something with illiquid notes or something like that, definitely look forward to collaborating with you so we can figure out what the risk is here. So that's the story on SEAC. Let me see if I don't see any chat questions. But if you're not a member of StoryTrading yet, you can become a VIP member at StoryTrading.com. We have access to a dedicated WhatsApp group for each of the stocks we talked about tonight. And you can head over to our website. Also check out our other events coming up. You can follow us on YouTube and on Twitter at StoryTrading.